Hey, good. Wire TV. Today is Thursday. It's August the 2nd. Thanks for joining us here this morning. A lot of news coming out this morning, and we wanted to talk about all that here this morning. Jobless claims this morning, right in line with trade estimates, should be supportive feature to the stock market and the economy. We are down overnight in the stock market. Crude oil a little bit softer as well. Corn up about 3 cents following the lead of wheat, which is anywhere from 8 to 9.5 cents better, while soybeans trading about a nickel lower. All right, let's talk about what's happening here. Corn, soybeans, as we mentioned overnight, beans under a little bit of pressure here. We've not seen anything as far as a trade agreement with China, and until we do, we're probably going to find a little pressure. But supporting prices will be the dry weather forecasts that are out there in the 6 to 10 day time frame, along with temperatures that expect to be somewhat cooler. But the dry weather will be a little supportive. No private export sale announcements this morning, so we've gone the entire week so far without any export business. We did have weekly export sales, and they were decent for corn, 50.3 million bushels, beans 23.4, and wheat at 14.1, going to be considered routine for the marketplace. Yesterday afternoon, FC Stone came out with their estimates of the corn crop. They put the corn yield at 178.1. Remember, USDA is currently at 174, and the bean yield at 51.5 bushels per acre. So trade really did not react much to these numbers. There was some talk about a 180 yield possible in the report last month after the USDA released it at 174. A lot of talk that yields would actually be closer to 180, but I think we're seeing yields trimmed a little bit here with the dry weather. Not a perfect finish to the growing season, but this kind of sets a baseline. I think if we go into next Friday's report, that's a week from tomorrow, we come in anything under the 178 that we saw from FC Stone will be considered bullish for the trade. Same thing for soybeans. Anything under the 51 from the USDA would be considered, I think, bullish for soybean prices next Friday. Iraq bought 50,000 metric tons of Australian wheat. Egypt has tendered for optional origin wheat overnight. I do not expect the United States to get any of this business. We are pricing ourselves out of any export market business. And unfortunately, we're just not competitive. So we're going to see business turn elsewhere. We're seeing wheat futures rally, and it's a supply-driven rally, not a demand-driven rally. I know there's some talk that demand is going to shift to the United States at some point, but unlikely that will happen anytime soon, as our prices are just not very competitive, and there's too much supply out there on a worldwide market. All right. Cattle futures rallied yesterday, but hogs went to contract lows. This comes despite weights coming in down slightly from last week. They are up from last year, so it tells us we have more supply to work through than a year ago. This is kind of the same thing in the cattle market, but we've got much more demand for cattle than what we do for pork, and beef demands remain strong. That's the key going forward, is if our demand starts to falter, what's going to happen to the prices? As we've seen with the hog market, prices have fallen quickly to contract lows. Cattle are in an uptrending market, but we could see this demand start to falter, and cattle prices, especially in that fourth quarter of this year, could fall hard. And this time of year where producers really want to look to be hedged in feeder cattle, fat cattle going into the fourth quarter. And I think it does appear that feeders have topped out for the year. Have a great day, everyone. Give us a call if you have any questions. Good luck. Good trading. This has been Brian Hoops for Midwest Market Solutions. We'll talk to you soon.